Hey, what's going on, guys? Welcome back to another pre-week market analysis here. Corey Smith with CoreFX coming to you through T3 Live here on YouTube. Today is actually Friday, November 11th. Recording this one a little bit early. Markets have closed for the week, so everything's all said and done. Just getting ready for the week ahead. I'll be uploading this video this weekend for you guys to get ready for the week coming up. November 12th is the Sunday. Markets open. These videos cover everything from strongest performing, weakest performing currencies the week before, fundamental news events, what happened, what's going on around the world in each currency pair, and cover the week ahead, what to look for, what events are tradable, what events to keep an eye out on, and really just everything you need to get prepared for the trading week ahead with the Forex markets. So I'm going to go ahead and get started here with you guys covering this past week and what happened in the markets. We had a good October, second half at least, and so far this November, we're off to a decently sluggish start. There's been some decent moves, definitely decent trading opportunities, but as far as overall volatility and movements go, there's really been not too much going on. As you can see, this past week for overall relative performance, we had the pound, CAD, and euro leading the charge, but the yen, Swiss franc, really New Zealand, we're all not too far behind. The dollar, Aussie, New Zealand were the bottom three performers, with the dollar leading the charge as the weakest. As you can see, though, the pound didn't even make a full percentage move in a week. That's not very strong for the FX markets, so still not seeing too much volatility here. And as traders, we do like to see bigger moves in the markets, more volatility, more movements, more opportunity to make money. So hopefully we get a little bit of a pickup here. December is typically a pretty slow month trading wise, and then January kicks off the new year, and we get a real good opportunity up through about April, May time. So hopefully we get some more opportunities here through November. But I'll go ahead and get started here with the currency pair analysis. Starting with the US dollar, remained range bound again most of this week until Friday when it broke out to the downside. As you can see here with this daily range I've got, dropping it down to the 4 hour, you can see a little better. We finally broke below this 94.50 support it was holding here. We had a break and close, so a significant move. 20 cross below the 50 SMA. We're trading below the moving averages, so definitely some bearish signs we're starting to see here. Still in an uptrend. We were basing, now we've just pulled back a little bit, hit this trend line. So really until this 94 support level here, which is the neckline of this head and shoulders I've been talking about for a few weeks here, as long as that holds, I'll remain bullish on the US dollar, but starting to see some early signs at least that this, what we thought was a new uptrend starting here, is starting to fade. Taking us to the euro, basically the exact same thing but the opposite. As I say every week here, the FX market's about 60% of the transaction is going to be the euro dollar. The dollar is one of the most heavily weighted, so these charts are really going to look very similar to each other. As you can see here, we have the same regular head and shoulders. It was inverse with the dollar, and then we came down lower, broke the neckline, formed this low base down here, and this week we just remained range bound within this base, ending the week stronger with the euro. At this resistance here, really, of this low base, just barely tapping up close to the 20 SMA. But again, as long as we stay under this 113 neckline resistance area here, I will remain bearish with this euro here moving forward. And that takes us over to the yen. The yen, as we saw, we made this lower low, lower high, lower low. We've been in the downtrend now. Moving sideways in a pretty ugly but still sideways range down here. On the daily, you can see we had this spinning top formation Thursday, and then we had a little bit of a bearish engulfing off of this 20 SMA and this resistance here. So I am expecting some overall bearishness out of the yen, technically and fundamentally as well. So we'll have to see moving forward here, but we're at the top of this low basing pattern, so I will expect to see some bearishness to be in the week. Starting here with the yen. Pound, as I've been saying here, we've been stuck in this range below about 129.50 here and about 127 to the downside. As you can see here, we're still in this choppy range. Moving averages have crossed and there's not much going on here. We have moved higher on the week and are starting to move back towards the top of this range, But really, as long as we stay within this range-bound move, I don't have too much conviction either way. We did hit a strong weekly trend line here, had some real ugly, choppy price action around it, and bounced off it. But overall, until we have a clear trend set, I don't have any strong bias on the pound one way or another. Going on to the CAD. The CAD seems to be now in a nice downtrend. We had this strong uptrend for a while as the Canadian Central Bank, the Bank of Canada, the central bank in Canada, had two back-to-back rate hikes. Then they had their data roll over and have seen continued weakness out of their data since, and have not hiked rates since. So we had this violation of this support here. We set a new lower low, and now we've rallied up to retest this resistance and the trend line and set a lower high within this downtrend. So to start this week, I do have a bearish outlook for the CAD as we've come back up to test this area, hit this trend line, and I would like to see some bearish momentum come into the market and roll lower. A nice, Monday or Tuesday bearish engulfing candle off this would give me some additional confirmation, but really as long as we remain below this 78 resistance level here, I'm going to continue this bearish bias with the CAD here. Taking us over to the Swiss franc. The Swiss franc is still in a downtrend, in a choppy low base here. I'm going to get rid of this line now. It doesn't look right there. As we have price came down, bottomed out, and has now just remained choppy and range bound here between about 95 and 94.50. We could say roughly it's in this range. So until we break this trend line and up above 95.50 this year, or back below here, 94.50, maybe even 94.20 area, it's really just in a low base. Technically speaking, we have the 50 about to cross the 20. The 50 about to cross the 200 SMA, and we are in a downtrend still, so I still will be having a bearish bias on the Swiss franc, but until this low base is broken, could just move sideways. Australian dollar, we've seen, as we went over last week, it was in a nice clear lower low, lower high, lower low, rallied up to make this lower high. We called that at least it would come down to retest this low, possibly extend down to make a new lower low, but it just remained range bound here throughout the week. We are underneath the 200 SMA now. I am expecting price to break this low this week and continue down with another leg lower to make another new lower low this week. Taking us over to New Zealand dollar. Last week we went over how it came down and hit this very strong weekly support, bounced up. We closed last week with a shooting star candle here on resistance. That was right around tier, and price actually did break back up above that shooting star, above that resistance, but just remained choppy through here. So nothing really clear happened with New Zealand dollar this week. Just a bunch of range-bound moves. It's still in an area where we have a nice pullback, a nice bear rally within this downtrend, and I still am expecting a move to the downside coming ahead here out of the New Zealand dollar. Real quickly, going over to the S&P 500, still moving higher, still in this uptrend, although this week we did have the first bearish week since September. So little spinning top formation here, no real sell-off to be too worried about, but as you can see, the week started up and ended up closing lower, so we did have a lower week this week, as we saw in the equities, in the FX markets, with a risk-on theme going on. So just a good thing to be aware of here as FX traders. So when we see risk-off and risk-on moves, we can see strong changes in which currencies are being bought or sold more. And the Swiss franc, the US dollar, and the yen are the safe haven currencies. So the dollar, not so much as late, but Swiss franc and the yen were strong this week. New Zealand, Aussie, and CAD are typically the risk-on currencies, the currencies that perform well in risk-on times, as they're higher return, riskier currencies. So you can see they sold off this week. Again, that's not always true, and there was a lot of other things going on, but we're still seeing a little bit more of that risk-off tone in the markets this week. So this takes us back to the news, what happened this week. Not the craziest week as far as news events go, but starting on Sunday, Crow to speak, the Bank of Japan governor, he spoke on Sunday, nothing really impactful happened. Then we had New Zealand. They had their inflation expectations. Basically, businesses are surveyed um, on their inflation expectations over the next 2 years, as I covered last week in this. But businesses basically pulled back on their 2 year inflation expectation and lowered their growth expectations from 2.09% to 2.02%. So, really, just a little bit more bearishness out of the New Zealand dollar. Nothing too crazy. Nothing really happened off of it. Then to start the week, there was another massacre in the U.S., leaving 25 dead in a church in Texas. Any kind of events like this can trigger these investor sentiments to change to risk on, risk off themes. So a little bit more of a sluggish tone to get the week started. Monday, we had the Australian dollar's RBA rate statement. They left rates unchanged at 1.5%, which is record lows, historical lows for Australia. But this was as expected. They haven't hiked rates now in 7 years, since November of 2010. I believe they last slashed rates last year. But they haven't slashed rates in a little while either, and they're not really planning on doing anything with the rates in the near future. They've left things pretty much unchanged with no alteration to rates in the near future. They've had mixed data with missed CPI but beat jobs reports, so they should remain pretty neutral until something changes. The board did note that economic forecasts remain largely unchanged. The labor markets remain strong, but household incomes are growing slowly and debt remains high. Inflation's still low. Housing sector still their greatest source of uncertainty. So not too much has changed, but not very hawkish or dovish either way, but not any better with the hawkish terminology. As we know, Australia has been saying that they're behind the rest of the world in the recovery, and they're not going to join this rate hiking cycle until their domestic forces show them a need to, and they have no need to that's apparent yet. But that's really all that happened on Monday. Taking us into Tuesday. Tuesday started with Draghi speaking. It was really uneventful. He just gave opening remarks. There was 3 central bank speeches here on Tuesday, all of them pretty much uneventful. We had Polo speaking, Bank of Canada. That turned out to be pretty uneventful as well, even though it was an event that we were supposed to be looking to see some volatility around. It really didn't turn out to be anything. Same with Yellen. Yellen spoke as well. Nothing really came out of it. Not too much to pay attention to there. China's trade balance missed expectations. Could have some additional influence on the risk-off environment, as we saw throughout the rest of the week, as this is one of the biggest economies in the world, and their trade balance, the difference between exports and imports, they're a huge exporting nation, so, not too big of a miss, and still crushing it as far as exports dominating their imports, but still something we want to keep an eye on with trends and how it goes. U.S. stocks closed lower on the day on Monday, pulling back, losing some of the gains they gained earlier. Taking us to Wednesday, really only significant thing again Wednesday was going to be the RBNZ rate statement out of New Zealand. The acting governor, Spencer, who's filling in for 6 months until the new governor replaces Wheeler, says that changes in the government won't have much of an effect. As we know, there was a new prime minister voted in. I went over this with you guys already, and the New Zealand dollar kind of sold off of it. But they're saying they won't have much impact on the bank's views of economic conditions. They've kept the cash rate unchanged at 1.75% as expected, and they did increase their inflation forecast due to the new government policies they think will be a little bit more bearing on inflation, and the weaker New Zealand dollar they think will increase the inflation as well. New Zealand dollar did gain strength off the news due to this increased inflation forecast. Economists still forecast, though, that the cash rate is going to remain unchanged through late 2019, though the weak New Zealand dollar and the uptick in inflation could cause them to act sooner, and as with all central bankers, they are currently playing it day by day, data by data, to see what comes up. Inflation numbers out of China, consumer price index, producer price index, both beat expectations, so strong price inflation in China still. So, growth and inflation in China remains strong, one of the world's strongest economies. U.S. stocks closed higher on the day on Wednesday. Nothing too crazy, no record highs or anything, but it was a higher day. Takes us into Thursday. We had the European Union economic forecasts. They basically said that the growth is on track to hit the strongest GDP growth this year in a decade, and they're expected to see this growth continue through 2019, though it is going to ease back a little bit. So the economy's growing much faster than they expected it to in Europe, and they're seeing great signs. And this was really just an overall bullish meeting for Eurozone out of this. So we saw the euro stronger Thursday and Friday. I believe most likely was due to this stronger outlook from the European Union and their economic forecasts. Um, then we had the Swiss National Bank Chair Jordan. We saw a little bit of a stronger Swiss franc off the speech, but nothing too crazy. Really, no sustained moves or anything drastic happening around that. Friday early morning. Oh no, sorry. Thursday night we had the RBA monetary policy statement. This is their quarterly statement on monetary policy, updating their projections on inflation, unemployment, GDP, really the economic condition. The takeaways from this policy report are really that they decreased the inflation outlook, showing that the Reserve Bank of Australia believes it will take longer for inflationary pressures to build. Basically, what that means is the RBA is more likely to hold off on any interest rate hiking for longer than we initially had expected, as if they don't think inflation is going to pick up, they have no real reason to hike rates to slow down the price increases. So, really just more bearishness for the Aussie as we don't see them hiking rates even more so in the near future. And they had also have adjusted their GDP down by 25 basis points, quarter of a percentage for next year and 2019. So more bearishness, and the Aussies really just sliding lower a little bit off it. And I think we'll see a continuation of this next week. U.S. stocks lower on the day, though they regained a decent amount of their losses by the end of the day. It still ended lower. And then Friday early morning, again, manufacturer production out of the UK beat expectations, third time in a row, third month in a row. This shows the change in the output produced by the manufacturers and is, again, the leading indicator of economic health in the manufacturing sector, which is a huge part of the economy. And the manufacturing sector reacts very quickly to economic changes, so this is why we see it as a leading indicator. And it beat expectations for the third time, so this is showing continued strength out of the UK. They also had a goods trade balance beat expectations here as well. So really a strong report here for the pound again, and although technically don't have too clear of a bias, as long as this data continues to come out strong, the the Brexit negotiations are actually starting to come together and starting to look better. They're having good data. I really do think fundamentally the pound is going to keep trucking higher here, and hopefully we see that carry over to the charts and price action does move higher out of the pound. This is new here. Draghi speaking. Let's see what it's about. He's speaking at a charity event in Milan, so not really anything to call home about or really be worried about, but keep an eye on it. If he does say anything directly relating to monetary policy, inflation outlook, anything like that, it could have an effect on how prices open Sunday with the gap, but most likely nothing going to happen off that. Taking us to next week, starting with Sunday, November 12th. Again, another not the greatest trading week fundamentally. Starts off slow, does pick up, but starting Sunday, really nothing going on. Assistant governors and FOMC members speaking, really nothing to worry about in any way. When you have days like this, especially on Sundays, I really highly recommend you don't trade these days at all. There's not enough liquidity. As traders, we don't want to trade illiquid markets. Spreads are whack. Movements are really unpredictable. Stop losses get hit. There's no clear breakouts or continuations or follow through. It's really just not a good time to be in the markets. So Sunday and Monday, really, even this coming week, I wouldn't really be looking to trade. But at least Monday, we have a couple things. First, the out of Australia, the business confidence report. This is going to be a survey of businesses to gauge the level of current business conditions in Australia, similar to the consumer confidence that we do here in the U.S., but with businesses in Australia. And I'm interested to see how the reports come out and how they react with all the bearishness we've been seeing out of the Aussie. And if this is a negative report again, we could see this trigger this continuation down with the Aussie. And then we have a back-to-back Australia dollar affecting news, as China and Australia and New Zealand's economies are also interlinked. Any Chinese data directly affects New Zealand and Australia the most. So Chinese data, if you're looking to trade it, trade the Australian dollar. Secondly, New Zealand dollar, if not the Australian dollar. But then we have industrial production out of China. This is the total change in value of output produced in the industrial sector. manufacturing, mining, utilities, these kind of things. China is one of the largest economies in the world and is an industrial powerhouse. So these numbers are definitely something we want to watch. They have a broad impact across the board, mainly investor sentiment, as I go over with the risk on, risk off themes. Taking us into Tuesday, out of the pound, we have CPI and PPI. These are the inflation readings from the consumer side and the producer side. Consumer side being the very big one to watch. These are really, really important data pieces right now, as the inflation is something we're really keeping an eye on. Bank of England just hiked rates. They said it's a one and done. They're not going to be looking to do it again for a while. But if they start seeing an increase in inflationary pressures and wage growth picks up and these data numbers continue, then we could see this rate hike cycle continue out of the UK. But inflation numbers always great trading events. If you don't like trading news, be aware of any pound positions you're in, because it can move pretty drastically off these numbers. And we have actually out of the Swiss franc, we have PPI numbers as well. These are going to be the producer price index. This is going to be the inflation reading out of the producer side of things, so the production side of the economy out of Switzerland. It beat the last two, so we should see some decent movement off this, especially if we have like a miss or something like that. Just keep an eye on this number as well. Out of the Swiss area, Europe has the flash GDP quarterly report. This is the second GDP estimate, so it's typically not too impactful. The preliminary GDP is the one we watch for, as we went over last time, and that was already released a couple weeks ago, so it's still worth watching and could cause some moves if something is off, but typically this is something we already know the answer to, so it's not going to cause too much movement. Then we have producer price index out of the US. Again, these are inflation numbers from the producer side of things. Hugely watched numbers right now. The Fed especially has their eyes on this, as inflation has been lackluster in the US and needs to start picking up if they're going to continue with their rate hikes. So the gradual rate at which they hike rates really will depend on how fast the inflation picks up and wage growth and jobs market and all this stuff. So inflation is really one of the biggest numbers to be watched and something we really want to keep an eye on here. And then Japan has their preliminary GDP. It's the first quarterly GDP release from Japan, so typically see some movement out of this. So definitely something to keep an eye on. Then we go into Wednesday with the pounds employment report. They have the average earnings. This is the change in wages, business pay, employees. So the wage growth report that we've been watching very closely around the world. Something that's been struggling in the UK and that they've been worried about surrounding Brexit and all. So should cause some very strong pound moves. Be very careful trading around this. If you don't trade the news, if you do trade the news, this could be a really good event to trade. They also show the claimant count change, which is the number of jobless claims, and the percentage of unemployment rate. So this is going to be their employment rate here. Good trading event. Another great one here, the CPI out of the U.S., so like the PPI inflation number, but this is going to be the consumer price index. Definitely more important than the PPI, but they're both very important numbers, as they are what the central banks use to gauge inflation. And it's really going to be what eyes are going to be on this week out of the U.S., followed by retail sales. We've gone over a bunch of times. The change in value of retail sales, the primary gauge of consumer spending. Consumer spending is a massive portion of the economy and strong economic data, and has a really big impact on the economy. So these numbers also is being watched by the central bank, has an effect on interest rates and the supply and demand of the U.S. dollar. So this is something that we want to watch as FX traders as well. Then we have the Australian dollar's unemployment rate and employment change, the number of jobs created, as well as the percentage of unemployed. It has been very strong lately, and one of the only data coming out of Australia that's been consistently strong. Their labor market, they know, has been consistently strong. Not too much else has been lately, though. So a miss in this could see a very strong sell-off in the Aussie. If it beats expectations, we still could see a sell-off, or we could see a little bit of a rally. But either way, look out for this report here on Wednesday night out of Australia. Thursday, early AM, we have the pound retail sales. This is, again, I just went over, but another strong data reading from the UK that we'll be watching. So good trading opportunity for the pound. That takes us to the Euro's final CPI readings. It's not very impactful, as it's just the final version. The flash CPI was released a couple weeks ago, so it's still an inflation number and worth watching, but really shouldn't cause too much of a market impact. Then we have New Zealand dollar. They have their business manufacturing index and their PPI numbers. So basically, the It's a survey of the manufacturing businesses that gauge the economic conditions, shows how businesses feel about the economy, and could be important right now with the new government in power to see, what people are thinking about the economy here moving forward. And the PPIs, the inflation numbers for the New Zealand dollar, and central bank still holding off on hiking rates for a while at New Zealand, inflation being so low as part of this reason. So keep an eye on these numbers. If they start picking up, we could see them adjust their outlook moving forward. Friday, we have Draghi speaking. This was recently added as well. He's delivered a speech titled Europe into a New Era, How to Seize the Opportunities at Frankfurt. So this most likely is just going to be him speaking. Not expected to be touching on anything that we really want to keep an eye on. But anytime these central bankers are speaking, we want to be aware of it. So put it on your calendar. Know it's happening, but don't really plan on anything crazy happening. Very, very, very. The event of Friday is going to be CPI out of Canada. Again, Canada Central Bank has joined the rate hike cycle with the U.S., now England. They hiked rates twice back to back, and data has kind of fallen off since then. So it's really important from Canada that they're going to want to start seeing this data pick up. Otherwise, they're going to really worry about the hikes they've done. Not that they're going to pull back and cut the rates, but they're going to definitely be wary of moving forward here with any additional rate hikes. So if we want the CAD to reverse out of this downtrend and start gaining any strength, we're really going to have to start seeing a turnaround and pick up in these numbers. And inflation is one of the big ones we're going to need to see get some pickup here. So keep an eye on this report Friday. This should be the mover of the day. Not really expecting too much else to be going on Friday, but this week should give us some decent opportunities. Again, not the most news-filled, not really central bank stuff going on, but enough events going on to definitely create some opportunities for us, and definitely be an interesting enough week to trade it and make some money off of it. So thank you guys. I really appreciate you taking the time to watch these videos. Make sure you subscribe to T3 Live. Again, this is Corey Smith here with CoreFX, and appreciate you tuning in and check these videos out. Make sure you check by next week to see what's going on, what happened with all these events, and what we'll be looking for moving forward. Thank you guys, and have a great week.